Hello, everyone. How is everyone doing this morning? Let me just make a quick little camera adjustment. There we go. Good morning, Royal Palms. Good morning, Zello. Good morning, Jacob. Good morning, Mark. Well, thank you for putting in the earnings, Sterling, and good morning. We have Google, well, Alphabet. I'm still going to call it Google, but stock down 4.89 after a beat. Good morning, OD Green. Snap is up after a beat. ConocoPhillips misbeat, stock down. Good morning, Patrick. What else? We got Bristol Myers Squibb up after a beat. Good morning, Yogi. How we doing? Oh, Estee Lauder. Whew. Down big, not nearly 10%. Oh boy. Markets continue to drop. Not surprising. We're feeling a bit heavy, but they still haven't triggered any major sell patterns. Good morning, Jake. Again, week's almost over, coming to an end. We had the Challenger job cuts for January come out. Really big drop there, 108,000. Not shouldn't have been much of a surprise because like people like Amazon already announced their big layoff plans, and UPS. Market seemed to be reacting to that though. Good morning, Heinrich. Hello, Charles. Good morning, refreezing sidewalks, holy. We got initially jobs claims popping above consensus and above prior. Continuing jobless claims going up a bit, but below consensus. So that's where we sit. We still have the job openings and job quits from December. And we got Bostic speaking this morning. Tomorrow, remember, we don't have non-farm payrolls. They have been rescheduled to next Wednesday. Next Wednesday, non-farm payrolls. It's because the government shutdown delayed it for a few days. So tomorrow we just have consumer inflation expectations and sentiment. But today, S&P 500, there's your Google down over 5% now. Only thing, you got Broadcom trying to bounce. Other than that, you have Lilly following through. You have Netflix trying to hold in there, but the rotation into consumer defensive with these aren't really they're still defensive stocks, but they're also insanely overvalued. But let's just pour all our money into, why don't we find some stuff that's not overvalued, people? Groups. Let me just refresh that. There's your consumer defensive. That's the only thing leading in. Utilities, which is definitely a risk-off type of movement. But comm services leading the way down, and basic materials with gold and silver pulling back again. Fed Watch has 88% for still the pause in March, and we're in fear mode still. Schiller PE still above 40 even with this pullback. Again, thanks to Sterling for putting in the earnings. We have the big one after the close is Amazon. Oh, look, my strategy. Oh boy, strategy is with wonder what the comments on Bitcoin are going to be. So we shall see about that. So the big thing that we'll pay attention to is Amazon after the close, and tomorrow we don't have much. We got Toyota. There you go, Sterling. Toyota tomorrow morning. Other than that, not much. Nothing is really going to be market moving. So, all right. Good morning, Anissa. How are you this fine morning? Good morning, Ted. You're late, Ted. You are late. So, we're still, now remember, this is changed into technically a weekly double top. I'll still follow it on the daily. My major thing is, though, if we start losing this 50% harmonic, if we start losing that key area and the lows from the mid-December, then I'll really start moving more into bearish mode besides slight bearish mode. We're back below the 50. We still are getting buying pressure in the afternoons. We get the selling pressure in the morning and still the buying pressure in the afternoon. So I'm paying attention to this, if that keeps showing up today. All right, but we've not triggered any major patterns yet, and we have not broken major support. We just have some minor stuff, and like some people are still freaking out. And yes, the market's been very, very heavy. We've talked about that, but we still have not broken any major support levels. So what can we look at this morning? On a rally, I'm paying attention to the 68.65 area and then 68.92, 93, 94 area on rallies. On dips, coming back down to about 68.35, 68.37 is going to be very key. Very key. Remember, 68.14.50 are the major lows from the week of the 20 or the day of the 21st. We break through there, you got 68.74 is a 50% harmonic from the lows in November to the highs in January. So that's going to be very key if we do continue over the next couple days to break down. That's a very key level to watch for. In your NASDAQ, first on the daily, still expecting the NASDAQ to reconnect with the 200 at some point in the not too distant future, which is really the major support lows from November. That was resistance from August, retested in November, converging with the 200. So not today, of course. Well, I guess technically it could if we had disaster mode come out, but that's not going to happen. Going to be watching, though, today. We got the 62.5 harmonic, 24, 8, 21, 25. We closed below there. That technically shifts the probability. So then on rallies, I'll be watching for short-term, still rollover plays. And the major, we have some key resistance now. Some key resistance. We'll take a look at that 4-hour chart, just updating it here. But really, we're looking at first areas about 24.9. 24.9 is your first area of resistance if we bounce into the open. And then major 25.150 area. 25.150, which we broke below yesterday and retested. So to the downside, the targets that I'm utilizing are the harmonics, 24.515 area, and then 24.210. We also have a gap left behind that's never been filled from the right before Thanksgiving in November. So that gap fill is the 24.305. Yes, you were tardy, Teddy. Unacceptable, but at least you're here. When oil starts to rally, gold will crash because the dollar will start to rally too. Dollar's been. Are you talking a major dollar rally? Which we could well still see. I think that was now turned into the flush out move with the dollar, but we'll keep an eye on that. Dollar stalling out a little today, but it's bounced back strongly from retesting that key low area with a reversal bar. The Dow still holding up. Can't get above this trend line on a closing basis. So Dow's the last one I'm really paying attention to right now. Really strong selling pressure when it gets above 49,700. We've had a lot of selling pressure all the way back to beginning of January. The selling pressure's dropped a little. It was a little higher, about 49.8, but now it's 49.7 is very key on selling pressure. You got some fair amount of support about this 49,350 to 49,400. It really's got to start getting below that with some momentum to test these lower levels, and then it'd be 48, 49K. We have to start losing 49K before more interested in anything but range-bound trading on the Dow. The Russell, though. Russell tried again, rallied, Yesterday, we had some buying pressure in the afternoon. Now coming back down, I'm going to be really focused on this 50 EMA area. 2005.90. If we get down there, that's going to be very key. Before that, I'm looking at yesterday's low. Yesterday's low officially being 2598.6. Again, we still have the triggered head and shoulders top with the upward sloping neckline. Trying to also hold, it's dipped below this level a couple times with this key prior resistance level from December and the beginning of Jan before the strong breakout from it. It's tested that a couple times. So we have this really big support zone between 25.90 and 26.03. So it's got to chew through that before I could get more aggressively short for another key pop down. Before then, it would be like shorts and really see how it reacts in that area. If we start getting the buying pressure, cover those quickly. The VIX, we dipped above 20 yesterday, but then sold back down, and now we're back above 20, right near the highs from yesterday. So I'm focusing. If we start dropping below 20 again with momentum, I'll start looking for that buying pressure, especially in the afternoon. If we do not, we could see some more sustained selling pressure then and break some key levels. The DAX is breaking down again, still watching for the reconnection with the 200. Nothing has changed unless we go back and close above 25,136. Still watching for that reconnection with the 200. The yields pulling back a bit today. We do have that double top in place against the rotation zone in the short term, but then if it did trigger, it would be out of the way of that. That's the only thing that shifts me in the short term on yields. What else? Crude. Set up yesterday with the rally. Set up a potential double top pattern. I am staying bullish on crude unless that double top pattern now triggers. So that means on pullbacks, I'm still watching for buy setups. Okay. But if that triggers on a daily close below 61.12, then I will shift my stance. Not much to talk about with natty gas. Gold, still between the 50 and 62 harmonic. We've already had one rejection. So let's just see. Nothing's invalidated yet, but paying attention to this. More importantly on silver. Silver, the only thing that'll shift me now to bullish mode, we're in potential double bottom territory on a daily basis. It couldn't even get to the 50% harmonic. Remember, the percent B didn't trigger. And now, so the only thing for me in silver is if we get a move and then a follow through close above 92. Above 92 is the only thing that puts me back in short-term bullish mode in silver. If we start taking out Monday's lows, the next key areas between 62.88 and 64.87. That's the next area I'm looking at. So that's going to be interesting. And look, the 200, could we reconnect at the 200 with this major base from October? We might. Boy, wouldn't that freak people out? Around 50 bucks. Wouldn't that freak people out? All the latecomers to the metal game. Not much to talk about in copper. Still holding. This is the key level I'm looking at right now. About this 575 area. We start breaking below there. It's not an official top pattern, but it's really then looking like the breakdown play in copper. Platinum, not much of a bounce in platinum either. I'm now still watching this 2022 level. I'm also expecting platinum to probably reconnect with the 200. Dollar index, been on a power move since it had that quick reversal. And now it looks like it's topping out a bit here. So would not be surprised to see a pause and or pullback. Remember, we had the little mini double that triggered and immediately reversed. So I'm going to be paying attention to very close around this $97 mark on the pullbacks. Euro looks like it's trying to put in a little mini bottoming pattern. It's not technically a double on the 4 hour. A sloppy one on the daily for a potential bounce, but I'm paying attention to this yesterday's high. Yesterday's high of 118.38. Yields in Japan pulling back after a successful 30-year auction, taking a bit of pressure off the 30-year yields. So nothing to do in the short term there, but watching for a pullback into the weekly rotation zone on those 30-year yields and the 10-year. Looking for it to possibly reconnect with the rotation zone before another push higher. Nothing is solved there. They had a successful auction though. Yen back above key resistance. Spiders. The spiders, again, where it's just like the futures, of course, you're seeing the buying pressure. Right now, harmonic levels, I'm looking at 680. We're trading just above that 680.67. On a rally, I'm paying close to yesterday's low of 681.76. We get through there, 685 area. That's even before the gap fill. On the way down, we start taking out this 680 area. I'm paying attention to this reversal opening price. 680, what was it? 679.65, and we still have a gap left behind to 677.58. So that's still a magnet price. And then you have a bigger gap left behind still back down to 671.20. If we continue to see a breakdown in that. What is this? Crypto guys are the best because when the price is up, they're rich. They mostly post memes, and when the price is down, they've lost their house and they're suicidal. They just post memes, so they post memes. We'll get to the Bitcoin in a second. Yesterday, the Q's closing below a first key level of support and nearly filling the gap. Looks like the gap's going to be filled with another gap today. That gap price was to 641. We're gapping below that. So between yesterday's low of 647 and that 641, that's the first level of key resistance on any rally. If it did rally up more, then I'm watching to the gap fill to 605.75. But 601.69 is key on a closing basis. So it's really got to recover this key resistance now to get back up there, or it shifts the probabilities. Remember, then we'd be looking at 594.71 and a gap left behind back from November 21st, which is 590.07. IWM. Come on, IWM. IWM not yet hitting the second target in the IWM. Rally would be for the gap fill to 260.52 right now. It's trading right at a very key level, just above it. You have about 258.55, 258.60 is your key level. We're opening at 258.83 area. So if it starts taking out that, watch out. If not, if that holds, then I'll watch for the potential gap. Now, speaking of the crypto bros. All right. I'm expecting a pretty decent bounce at some point. Yes, you do have percent B buy bars now against the rotation zone, and we're at the 50% harmonic from the major lows in November of 22 to the highs in October of last year. We're at that 50% harmonic, which is very key, not only because it's 50% harmonic, but it was a prior major resistance for most of 24 until we broke out with the Trump election. Not the swearing in, but the Trump election. So, retesting that very, very key level. We also have the harmonic projection down to 25%. So there's a major cluster in here. So I'm starting to watch for a bounce pattern only. is we don't have anything else yet besides some 4 hour possible percent B buys. I'm more watching for a daily something. I saw it. Yeah, I saw that. That was idiotic note from J.P. Morgan. From a risk adjusted basis. You know what? For Bitcoin being a safe haven asset, you don't really want, and this is we're gonna get a substantial pullback at some point in gold. It got overcooked too. Things are just overcooked. And at some point, on value stocks, you're going to see people just pile into them and overcook them too. But that's why I'm keeping a close eye on value stocks because I think that's going to be the next rotation. All of a sudden, fundamentals are going to matter again, and people are just going to then they're going to overcook the value stocks. So you really want to look to position something over the next few months. Start looking to value stocks to pay a dividend because I don't think you'll collect the dividend. And I think they're going to go on a tear. Ethereum, we don't look at that often, but closed back down at the end of the month below the 62.5. Already ticked off to 75. Going to be watching for a reconnection, possibly with this 1830 area. But there you go. There you go. There you go. What else do we have? Nvidia closing right at the neckline yesterday. Closing right at there. Looks like we could actually, let's see how it is today if it officially triggers that head and shoulders. Remember, Broadcom, we dipped below to a harmonic level yesterday and then closed back right at the 200 and trying to bounce a bit today, but I'm still watching for rollover patterns of Broadcom. Tesla going to be watching for the reconnection and the retest of the lows from mid-November for that. It's not a lot. But now we have the Walmart has gone vertical. Dirt cheap Walmart, P to E of 45. Oh my gosh. Would not recommend piling into Walmart at this point. This has gotten a little stupid. Sailor, well, that's below his average price. What was his average? It was somewhere above 70. Wasn't it around 73? Remember, he's got a issue debt to buy it. What do I like the best in the value category? Do I like the best? I have to look at my list. I'll have to look at that again. There's other stuff. By the way, you want to look at some other plays? Oops. Here's some other things to keep an eye on. Keep an eye on Adobe. Keep an eye on Adobe. It's now getting overdone. Software is testing again. I'm watching where it closes on this week. We might have a nice percent B buy set up for next week. Testing very key support. A very key area. Could be a nice for at least a bounce, if not turning into potentially longer term play in Adobe. Microsoft, if it can get down here, I'm going to be looking at that for a longer term play. Again, these are not value plays, but some of these software things are getting really overdone. If we can reconnect this with the 200, I'm really going to get looking for more aggressive stuff in Microsoft, that 200 area. Right now, it's getting really smashed. We might be setting up also some percent B buys on there. So those are a couple non-value. 76K, is that the sailor price? Thank you, Teddy. So we're going to be watching for some of these other things coming up. Adobe chart it looks like it could get a bounce. Now on Adobe, so I need something to trigger. If we close below 272, it would be just a bounce play only. If we can hold 272 on a weekly closing basis, it looks bad, but it also is way overdone. And look at the support level we're sitting at. I mean, this could retest if we get it. There's not a setup yet. I'm going to be watching this week, but this could easily bounce if we get some buy setups. To the mid 350s again. If not, if we close below 272, then I'm going to not be as aggressive. And again, that does not mean we buy. It means we're looking for buy setups in this area. This is a very key area. It looked ugly in here. All right. And we got a weekly percent B buy. And then it went on a tear. That's why I'm looking. Just something you might want to watch. But nothing's triggered yet. I can't stand REITs for the most part. I do not like REITs. I don't like many REITs. If Adobe breaks, watch this. If it cannot hold this 272 level, then we could reconnect with the weekly 200. That's why I need a buy setup. But that's very, very key. Other than that, definitely a lot of software is getting beat up way too much. Way too much. CRM. Being patient on this one because it did close below the on a monthly basis. Last month closed below the 62 and a half. But this will be another one. If CRM can pull back even closer to the 87 and a half and this over the next few bit, I'll watch more aggressively for stuff in there. Again, yesterday or on the weekly basis, it could close, not yesterday, but on the weekly basis, we could close below a short term support level. But these are the things I'm keeping an eye on separate from value. Separate from value. Oh, you can put it in there, holy, but just be careful with some of these REIT plays. Just be careful with some of them. The way they're structured, yes, they can pay attractive dividends, but they can also unravel quickly. Let's just take a look at our S&P into the open. Pretty decent selling pressure. So again, I'm not interested unless we get a bottoming pattern closer to the 68.29 to 68.14. Going to be paying very close attention to that today. And then seeing if we get that buying pressure in the afternoon. The VIX is staying now through yesterday's highs. So again, unless we start getting sharp reversals and the remember those volatility plays I talked about when it was dirt cheap down here again are starting to also pay off. They would not get greedy with it if you're doing some volatility plays. Would at least unwind something. Or at least know where some reversal levels are, because if we start getting buying pressure in here and this drops back down, you want to take something off from my perspective. So that's where we sit, peeking at the NASDAQ. Going to be very interesting to see how this closes out today. Yeah, Amazon looks about to pull back more. Amazon earnings after the close. Amazon a gap down. I was going to say a gap down there this morning. Watch the 200 with earnings. We're already there. We're already there with another key short-term support level. This is going to be interesting. If Amazon loses this right against the 50 EMA also, but if it loses this 210 price level, this 210, 211 price level, watch out. Watch out. It could easily retest the 200 week over the next few months. That's why I'm paying very close attention today with their earnings print and how it reacts. So there, Teddy's giving some good advice looking at the WPG chart. So thanks for sharing that information, Teddy. And again, holy, don't be afraid to put things in here. Anybody, don't be afraid to put things in here. Some people might say, hey, that's a great thing to look at. Other people might say, hey, I've been burned on these before. You got to do your research. That's what this is here for everybody to learn together. But do not ignore Amazon. Even if you're not in Amazon, do not ignore the earnings after close. Look how it's going. Let's look how it will react. With that, I will talk to everyone to wrap up the week tomorrow morning. Remember, no non-farm payrolls tomorrow. It's been shifted to next Wednesday. And let's see how we close today. If we get the buying pressure in the afternoon or if it starts drying up. With that, I shall see everyone tomorrow. Bye for now.